live because I just take any opportunity to insult Facebook because I think it's a garbage site.
Well,
But
why would we not talk about it live? It's Real Fridays live every Friday at 12:30. Brock, welcome, Brock and Jeremy. This is great.
I don't have a YouTube account or a Facebook account.
So,
yeah,
but why was it? What was your issue
Facebook,
though? Just
go get YouTube though. You got to be on YouTube.
Yeah, I used my Gmail to create a YouTube and got
there. You go.
But Rick added some layers of security with some boomer
authentication.
Yeah, I can only log in with Facebook. Yeah.
Oh, Facebook's garbage.
I don't log in using. I just click on the link and it opens up the StreamYard.
Facebook, Rick, you gotta get off Facebook.
I don't post fractionally as much as I used to. I'm primarily LinkedIn and I might do some stuff on Instagram.
From my Facebook spies. Yeah, I hear you're active over there. Jeremy, where are you driving to? Or fro?
My nephews are in a archery tournament in Louisville, Kentucky. I left Detroit this morning, and I am now in Kentucky, though I'm not to Louisville yet. But going to do some family time this weekend, watch a junior archery competition.
Nice.
So I figured I'd go hands-free for as long as I can here while I'm driving.
I actually love Kentucky. It's such a beautiful state. I love traveling through. I've had branches in Kentucky and Tennessee, and in that market, those rural markets are so beautiful. It reminds me a lot of Vermont. I was in Vermont, and just to value my time, I sort of came back down to Massachusetts and do some projects around the camp, around my lake place here, and then of course my kids and that kind of thing. But what do you guys have plans for Mother's Day? Just to start off on that positive note.
I have one more Kentucky thing. I was in Kentucky this week. I had to reroute a trip to Indianapolis to the Cincinnati airport, which I did not realize was in Kentucky. So stayed at an airport motel in Kentucky for a night.
It's in Covington.
3 days ago.
Covington, Kentucky. Yeah.
Yeah. Uh-huh. We've all been circling this week. Weren't you in Detroit, Rick?
Yeah, I've been traveling and so look, it's amazing. You know what's interesting about Detroit? It's such a Silicon Valley of mortgage companies. There are hundreds of mortgage companies and call centers. You would not think that direct to consumer is in my perception of things, like direct to consumer is really not an area of business that I run into a great deal. And from what I understand, the Chaldeans, like the largest Chaldean population in the country is in suburbs of Detroit. And they are just diligent experts at consumer direct call centers. They're all over the place. Just these micro partnerships with UWM, and some of which have some small warehouse lines, and they just pound the phones. They buy leads, trigger leads. It's really, really an incredible marketplace. It's the Silicon Valley of mortgage is the suburbs of Detroit.
All right. But it's pretty crazy concentration there. I mean, direct consumer is only in I don't know, Detroit, like there's only a couple of places where there's like any critical mass of direct to consumer sites. Charlotte, Detroit,
Charlotte, Phoenix,
and debatably Cleveland, and then I would say Kansas City, right? Kansas City's not a bunch.
There you go.
So that's why I was one of those places, because of that.
Jeremy, weren't you at the Innovators Conference in Southern California? Tell us about what your takeaways were from that conference, because that's a conference I've never attended, but I know California does such a good job with having their own microcosm of conferences to support North and Southern California businesses.
Yeah, I mean, there was, I think the CMBA does a really good job bringing together, convening, whether it's Southern California for technology like this, Northern California, I know they do for like the regulatory stuff in Sacramento. But anyway, they opened with an interesting point, which I hadn't really thought of, which was the MBA has done away with their technology conference, which
Yeah.
doesn't leave that many technology conferences if you want to have
Yeah.
conversations like this one. I know there is digital mortgage and whatever, but this did end up attracting a lot of people as a result because there aren't that many technology-focused conferences. I think it's probably good to focus on the word technology, not necessarily innovation, because it was a lot of the usual suspects in terms of technology. But there was, a conference like this, you're going to hear the word AI 72 times a day in every single panel. It's probably true in every industry right now, but it was certainly true in this one. My takeaways, I think there is a lot of energy around AI as a curiosity. I don't know how much energy there is around AI in core yet. Proven AI was there. That's a core function: income underwriting, income certification, income validation. But the vast majority of AI is still a curiosity. Can it do some workflow stuff? Can it do customer service? Sure. And we're seeing it, customer service for sure. I didn't see anything at that conference that told me it made the leap into the core business yet of mortgage, so to speak. Sales, marketing, customer service, definitely. Some workflow, a little bit. That's where I'll leave that topic. The one thing I felt like an idiot that I hadn't realized this before. I was watching the investment panel, VC, private equity, strategic investor, some angels up there on stage. And I just felt like I'm so dumb that I didn't put this together. I spent so many years being frustrated that I couldn't get investors to look at B2C. And I don't know why I thought they would. The entire investment community is B2B. It's all B2B.
Yeah.
And it's basically SaaS 3.0 when you add tech AI in there. It's just take SaaS and add AI to it and call it something. But I was like, duh, of course. Why would our industry care about the consumer or invest in the consumer when no one is focused on that? And so, it all made sense to me in that moment to be like, yeah, if the investors aren't investing in companies that are B2C, then nothing's ever going to change. It's always going to be B2B. So I think the companies that are going to succeed this year, the ones I talked to there, and the companies that are going to succeed this year are the ones that are honest about being a B2B company.
Well,
that's simple.
And that's where I'm confused, right? So when you say that, can you just elaborate on that? Because most of us that are distributed retail, which is the lion's share of the largest mortgage companies in the country, we would consider ourselves B2C, right? Because we have, obviously loan officers working in offices around the country.
Yeah, but their customer's not the homeowner. Their customer's you, NFM, and vice versa. They're producing a product for investors, and they are generating opportunities for NFM. So the homeowner is not the customer. They are not the customer of the investment community, the technology community, or NFM. The customer of NFM is the salesperson, and the salesperson's producing a product for loan investors. That's what's happening.
Did we lose
I said
them?
customer too many times. The homeowner is a byproduct. They're not the focus of any innovation at all.
Yeah, that's interesting because it strikes me. I was on a couple demos, and Greg Scher made a post about this, I think, earlier in the week, regarding AI companies that are voice. In fact, our innovator Samir out in California, creating an automated voice to make outbound phone calls on behalf of sales professionals. And the demos are incredibly impressive right now. Like I just was on earlier in the week, and you could literally engage a full conversation and be pretty convinced that you're on the phone with another human being. And then they pre-qualify you to a certain point to hand you off to another loan officer who's waiting to receive the call. But those are technologies that are outbound direct to the consumer.
No,
So
no,
then,
that is a B2B. That is a B2B company, because the benefit of that company is the loan officer and the lender. The consumer does not benefit from that company. The consumer doesn't benefit from talking to an AI voice bot.
The benefits, branch margins, or
Yeah.
loan officer time, loan officer
The consumer
convenience.
doesn't get a
which is
choice
fine,
to.
but yeah,
The
that's
consumer doesn't
easily-
get a choice to save money. The consumer doesn't get a choice to save time. The consumer doesn't get to pick anything. That is a B2B
Consumer doesn't
company.
want the AI. They might be okay with it, but they're not looking for it. Yeah.
Whether they are or not, we don't even know, Brock, because we've never even asked them or tried. You know what I mean? Like, we just do it because it's going to be beneficial to the loan officer and the company to not waste the time. Sure, I don't disagree that it's good for the loan officer and it's good for the lending community. That is a good company, but it's a B2B company. Let's not be mistaken. It is not It is not focused on the consumer at all.
so what would be an example of a in our mortgage space, a product or service that's just direct to consumer from a technology standpoint?
In the mortgage space,
I guess this illustrates your point. I guess is the point, is that all the investments have gone into solutions whose customers are lenders who might have a
buyer. The buyer of all the products has always been the loan officer, or if we want to stretch it, the real estate agent or the branch or whatever.
Yeah.
Yeah. I mean, Jeremy, when you're saying like wishing of a world where you could go to great investors with consumer facing mortgage tech and mortgage products, what you're thinking like around fintech type use cases for making mortgage easier? You're thinking new mortgage products, things like that, like new actual financial products. You might be frozen. Can you hear us? It's making some really aggressive points and then cutting out. I like that.
It's a good freeze frame on his part. Or he just dropped off. Maybe he'll jump back in. But that is an interesting point, is that it's not like there's investments in companies like LendingTree or maybe there are that I'm not aware of, that are just pure web aggregators that are trying to do kind of a GoDaddy kind of play to the consumer, to try to drive consumers through a specific intentional flow, where then that information would be repurposed to other mortgage companies. I don't know. I don't know. I mean, it's an interesting question. You know, the industry is kind of in this innovative. There's an innovative opportunity, an innovative cloud around an environment that is very status quo.
Yeah.
You know, which I think is kind of is Jeremy's point, and I think the point that you're making, in that it's just really difficult to break the chains, because you have to create an entirely new economic model, beyond or above the existing channels of revenue, in order to create like meaningful disruption, or at least a stepping stone to that next stage of disruption. What I said, Jeremy, was it seems like we're in this environment that has sort of the innovative clouds above around an ecosystem that very much supports the status quo. And that status quo is the mortgage origination process really hasn't changed meaningfully in 20 years.
Yeah, there are some good reasons for it, by the way. I don't want to act like there aren't good reasons. Like, software is difficult when it has to be your legal system of record for a high value asset that you need to transact. So like, there's a good reason that we have walled gardens like LOS and these other. I'm not naive enough to say there isn't a great reason why we have it. I think, Rick, what I was trying to say was there's a good reason we have it, but we have to be honest that that's the reason it's never going to change. I hope that makes sense. I went off camera just so I don't mess with you guys too much on the network issue here. But yeah, that's what I was trying to say, was like, there's a good reason for Encompass. There's a good reason for LOS. There's a good reason for it, but yeah, you can't innovate when you have to get into an ecosystem that can't really adopt rapid iteration.
Yeah.
But you can't really bear the cost. Like, how can investors bear the cost of doing these things that are like, you know, we're going to rewire the whole industry, and in 10 years it'll be, you know, the financial model of everything will be different, and so it'll work. You know,
Right, exactly.
Investors did take those bets actually, and some hit, most didn't. In 2020, 2019, 2021, but you know, it's a really hard bet for investors to take when it's all wrapped around, to Rick's point, when it's all wrapped around an industry that doesn't really have any more money to give. It's all already taken through all the other pieces.
Yeah, so I think I was, in some ways I felt like a little bit of like, oh yeah, the light bulb went off. And I think there's probably a lot of experienced veteran capital markets lenders out there who are probably like, yeah, I never thought otherwise. Like Jeremy was the one who thought otherwise, but it does help recognize what's possible, the art of the possible here. And, what's possible is to continue to chip away at the siloed tasks and work that goes into the business. And the consumer will likely get better and better UX as a result of some of these technologies. And that's about it. And that's fine, I would say.
It's interesting.
I probably have to stay off camera, so.
I would say over the last couple of days, I've gotten some inquiries from a handful of investment banks who've wanted to understand or learn more about mortgage tech, right? Where they're either doing, they're considering some kind of an investment in an existing player in the space, or someone like the Authentive platform that we've talked to, Jeremy, around AI and implementing AI. I just think that I think, to your point, before meaningful technology advancements can be made that are direct to consumer, it almost has to start with B2B, and then once the B2B evolution has taken place, then it gets rolled out, or the attention or direction ends up focused on the consumer experience, or a product that's direct to consumer. Because it just in the last several business days this week, I've gotten probably half a dozen requests, and these requests sort of peak and flow through these investment services. But all of a sudden, just in this last week, I've gotten a number of inquiries regarding investors who want investment banks out of San Francisco, New York, who want to learn more about origination, CRM, the point of sale process. So there's definitely some activity that's percolating, and it has to, obviously revolve or be inspired or be sort of initiated by so much of the AI conversation.
If I was running an investment bank and I was looking at AI and mortgage, I would start with the question of, how do I deliver the money legally as early as possible within the consumer's actual moment that they need it? And let's use a purchase as an example. I would say the moment they need it is when they need to apply their personal financial information to what they can afford in the market. So if I was an investment bank looking to disrupt mortgage, I would put the money right inside the shopping experience so that the consumer did not have to go anywhere else to apply and see that data flow over to their saved searches, or as they're saving their searches. If I was looking at the purchase market, that's exactly what I would do. Well, that is not at all what mortgage technology does today at all. And by the way, I don't even think that's what Rocket and Redfin are imagining either. They're imagining putting in a Rocket Mortgage link to the Redfin digital shopping experience. That's it. And it still goes over to Rocket, and it still puts you with someone, and then you come back to the real estate, and then you go back to mortgage, and then you go back to real estate and do the renegotiation. Then you go back to mortgage and order the appraisal. Then you go back to real estate and get the contingencies met. Then you go back to mortgage and prepare for the closing. Then you go back to real estate and get the contracts ready for closing. Then you go back to mortgage and get your closing date set. And then you're in servicing. Like, that's how that's still going to go. That's how it's still going to go. Because you can't put the money in the real estate experience, apparently. But if I was an investment bank, this is exactly what I would do. I would embed it, embedded finance inside real estate.
I mean,
but nobody's gonna.
I decidedly do think that's what Rocket and Redfin are working on, and Zillow Home Loans. But
I just don't see that.
When we left Rocket in 2021, that was I don't remember exactly when you left, Jeremy, but when I left, that was like the talk of the town over there, you know. And like, I don't have any inside information I may have had is 5 years outdated, but that was always the types of conversation was it's one process. The money's there, the shopping's there, you get the details of your loan on the home. Zillow's in an even better position to do it probably because they have so much more data around the real estate side to do this specifically, not in general. But you don't think that's where you don't think that's where these things are driving?
I think the way I was looking at it was, you're right. And I'm sure, and I know there were a lot of those conversations this week at Mortgage Innovators. I think what I'm saying is the way it's currently set up, that still requires you to go out to Encompass, right? So let's take the Zillow example. Somebody goes on Zillow and they click on buyability. Okay, you don't get to a Plaid-like experience as your next step, right? What do? You get shifted over to some sort of point of sale-esque thing that is trying to put lipstick on Encompass to make it a little bit easier to still go through Rocket Mortgage 1.0 from 2016. That, I mean, it's not called that because it's Zillow, but like it's a digital 1003 step-by-step inside the Encompass point of sale UX that you get to do for 2 hours while you started on your Zillow search. So
the refi side of the house has to be better than that, right? With the Ardleys and Havens and those platforms, you know, at least heading that way, right? I mean,
yeah, at least the refi side. At least the refi side will be emailed to you directly with your name on it and an actual offer with real data that says, Brock, click here to go to rate lock on
to change your today's
offer. Yeah. So yes, refi will be way ahead thanks to those companies. Haven, Ardley, I think, are good examples. Yes.
So that's good at least. So the money, when it's just the money, the platforms are getting better. But you're saying, but the platform investment between real estate and mortgage is still pretty thin. Possible exceptions of Zillow and Rocket, but even still.
Yeah, and I think
I agree with that. That's a lot of what Newsip works on. But
yeah, and I think if I was an investment banker looking at the refi game and disrupting mortgage that way, like I know it's going to take a couple years, but I'm pretty much sold on what you said, which is refi is not going to get competed. It isn't going to get shopped. It's going to be customized offers with a rate table, and you just kind of pick when. You set your parameters that you want to save. You set your parameters or your life events of what you want in your own dashboard, your own screen, and your servicer just goes, great, I'll let you know when we meet that. Like, great. I don't want anything else.
We can drop your payment $100 a month. We'll call you.
And you get to say up front, only contact me. Yeah, like you would get to set it up front to say, only contact me when it gets to $200. Only contact me when it gets to $300. Only contact me when I have $100,000 of equity available.
Or
it will.
skip the contacting. Go ahead and do it when it triggers that. And here's my forward consent, my forward signature.
That'd be cool.
Just go ahead and do it.
Refi for life, of course. Refi for life. I would love that too. I don't even think to your point, like I've even stopped asking people to do that. I mean, I would love a lender to do that, a servicer to do that. I've even stopped trying to put that program together. Just get them to get real-time offers in somebody's inbox is step one. But yeah, you should be able to consent to, I do want to be proactive on my refi, and I'm willing to consent even a year ahead of time that I want to be proactive on my refi, because that would be thinking like what the homeowner needs and wants. That is what homeowners need and want.
Yeah, like a real-time refi.com or real-time purchase. It'd be kind of cool to kind of just even be able to provide that forward authorization.
But again, that forward authorization is expensive today because somebody wants to charge you for income visibility that's ongoing. Somebody wants to charge you for soft credit visibility that's ongoing. Somebody wants to charge you. So the technology has been built, like I said earlier, B2B. Like it's been built to charge the servicer to monitor. It's been built to tax the servicer for offering a good service. Like to do what we just talked about, what consumers want, you have to pay a tax with technology companies because that's the only way investors or shareholders will pay for it.
Yeah.
You can't just serve the consumer what they need because, well, if you want income visibility, you got to pay for it. If you want soft pull visibility, you got to pay. Despite the fact that all the homeowner cares about is, can I set up my account and can you execute my account the way I need you to? But we're not set up for that. So you get taxed for doing what's right.
You know, there must be an easier, now that there is sort of the more of a real-time monitoring for servicers for income, assets, credit, and so on. It just seems like doing, and I don't know what the legality is, but kind of a forward approval that, like you said, maybe every 6 months you have to renew it, or every 12 months you have to renew it, or some period. It just seems like, why, I don't know why that is where the barriers really are. Like here's, if I know how much I want to save, it's just an automated input as to all the other financial details at the very point in time you can save that amount of money, that it auto-populates a document that's already been pre-signed and pre-authorized. I mean, after all, Brock,
I think one of the barriers, is servicing income. I mean, the whole structure of servicing is set up to be the lowest cost just to collect payment. It isn't actually ever been set up to do anything else for the homeowner. So the 25 basis points you get for being a servicer isn't meant to do anything else other than collect your payment and apply escrows accurately. So, I mean, that's part of it, is like the DNA of the industry is cut costs, collect payments, and collect as much of that 25 basis points as margin as possible. So anything else creative, anything else helpful eats into that and is a threat to that.
Yeah, that's fascinating. You know, I mean, realtimerefinance.com is available, as well as liverefinance.com. So those are two domains. In fact, liverefinance.com or realtimerefinance.com is only a penny. So it strikes me that like no one's really gone down this path. You know, liverefinance.com was only $1,900 as just a domain that's for sale, but it is taken, or it's not for taken. It's a premium domain.
Interesting.
Yeah. No, it's a fascinating direction, especially where we sit, where we're trying to change the status quo to make it cheaper, faster, better. Cheaper, faster, and just a better experience. I mean, that beyond just the coined words used to describe improvement. I think it's a real motivation. It's just that there's the financial interests to resist change to where things are today are just so great. So they're great in the legal community. It's great with how fractured the third party communities are. It's just, the resistance to change is just so substantial. It makes it very difficult to balance between making money in the status quo in the here and now, and then trying to drive change to make more money tomorrow.
Yeah, it's rational. I don't want to sound like I don't think that these are rational choices being made day by day or in a vacuum. These are all rational choices by the industry, and these are all rational choices by investors and tech companies. Like, it all makes sense. I'm not saying that. I'm just saying that understanding that has been really important for me, at least, but for everybody, to say what's possible and why we get the outcomes we get. That's why I've been saying, starting this week, I just started saying, and at this conference, I was saying, stop talking about lowering costs. We're not going to lower the cost of a loan. It's not getting cheaper. Stop. Just stop. Like, stop saying we're gonna drive down the cost of origination, because we're not doing what we're doing. Don't promise that. Promise that you're going to apply this technology to remove work and stress from your team and the customer. If you make more money, great. If you eventually lower the cost as a result, great. But I don't think that's the goal. I don't think that's the incentive. So stop saying that's what you're going to do. It's so frustrating.
So what do you think the incentive is? Like, what is the incentive, or what is the goal then? Because I mean, that's all we talk about, inside the walls of a mortgage company, is
to do more loans with the same cost, the same number of people. That's it. I don't think mortgage companies love laying people off. I don't think that they're not trying to do that. It's, can I just do more loans with the same staff I have, honestly, is all they are trying to do.
Well, that's leveraging costs. I mean, that's what drives your costs down.
No, they're not driving costs down. They're literally just trying to do more loans with the same cost. But
that amortizes your cost per head down, is the point.
Sure, but it's going to profitability. It's not going to the rate sheet.
Oh, yeah. Well, there's other dynamics that drive that, right?
Where most lenders have been mostly unprofitable for the last 18 months. It's driving down consumer costs is probably.
Like I'm saying, if you do more loans with the same head count but at a better efficiency, you're still going to report $12,000 to the MBA as your cost to originate. You just did more loan. Like, you see what I'm saying? Like, you're maybe slowing the tide of rising costs. Maybe you've halted the rising costs, but I don't see us meaningfully driving down costs in my career.
Yeah, I don't know if I agree with that.
Not doing it. I mean, not from what I saw. Like, take the Mortgage Innovators Conference, DocuTech, Dark Matter, Cotality, and ICE. Do you think they're going to help lenders drive down the cost of origination in a meaningful way? They will help lenders get more efficient. They'll help lenders get more profitable. They'll help lenders with the customer experience. They'll help lenders with the team member experience. They're going to do all kinds of awesome stuff in the next few years that go to the experience of the consumer and the experience of the team member. But it isn't going to lower the costs to anybody. As far as the bottom line of the rate sheet goes, it'll go to profitability. It'll go to margin.
To your point, though, and this loops it back to the very beginning of the point. The question is, who is it going to lower the cost for? That's really what you're getting to. It's not so much, it'll lower the cost to the IMB, just not to the consumer. Got it.
Right.
Yeah. I mean, look, the reality is, even during COVID, margins obviously exploded. But it's not as though that I mean, and of course the Fed drove the cost to the consumer down. But in today's environment where the Fed is really holding rates between 6.5% and 7%, the cost to the consumer isn't going to go down. It's still going to be, it's going to be what it is. The question is, how do you wrench the rag how do you try to get as much margin gains? I'm just kind of summarizing. I think what in my agreement with you, what you just said. I'm just summarizing my agreement around that because you're right. Because all we're focused at NFM is to try to grow to 15 billion by holding or maybe increasing your operating costs maybe by 20%, 25%. But how do we double our production by not increasing costs to us? But the cost of the consumer is going to be level and flat and stay the same. Now
we'll probably be able to take credit for that and say, hey, we depressed cost increases as an industry. We depressed rising prices. And I think that's true. That will be true. And that'll be a good thing. Well, we need to stop pretending like we have any control in the mortgage industry over the affordability of financing.
Isn't that interesting, the different questions around this? Because, a regulator would say, what was the cost to the consumer, right? A mortgage banker would say, were you able to meet, the time constraints that the consumer had, almost regardless of the cost, right? From a time to origination standpoint, because sometimes, a consumer says like, look, I just want to get this loan regardless of the cost. I need to get cash out from a refinance standpoint, regardless of how much it's going to cost me, because I need it for some event, regardless of the rate. I need this cash now. So I'll refinance with Figure and get a 9% rate. So it's not always about the lowest cost to the consumer. You know what I mean? It just depends on the angle or the lens you're looking at it and what the needs of the consumer are. And sometimes the consumer, one need of the consumer is get the lowest monthly payment, the lowest cost available in the market. And the other part is the consumer needs the money now, or they need to move into a home now, regardless of what the cost structure or what the costs look like in the very short term. It's just kind of an interesting sort of dilemma between what our objectives really are to do. Is it to deliver a loan, or is it to deliver a loan at the absolute lowest cost possible to the consumer, barring any other consideration?
I'm simply saying, like, I remember at Rocket, we were very good about asking the consumer their goals and retaining that information in a way that we could use it in the future for trend analysis. So if we did have a regulator say, this looks off, we could say, let's look at the data. And the data said that goal of that consumer was not this or that, right? You still have to meet minimum thresholds of net tangible benefit and different things like that, benefit to the customer. But like retaining that information is helpful, Rick, to your exact point. I think your exact point is well made. You still do have to meet the consumer's goals, and those goals aren't always the lowest price. My point is, we need to stop spending all this time talking about our ability to make whatever more affordable or to lower the cost. Again, I could be proven wrong by some of these lawsuits and regulator investigations about consumer ripoffs or, consumer deceit. But I always felt like almost all of these rate sheets are within a margin of error that is basically attributable to sales comp.
Yeah.
Every rate sheet in the industry is basically plus or minus a little bit of comp for whatever channel it came through. What are we even talking about? Like, that's my point. I do think if somebody wanted to re-engineer it, you could see an incredibly low rate to the consumer by addressing some of these issues. I'm just saying, let's stop thinking about it, promising it, working on it, because this is going to happen in today's structure and today's incentive. So save yourself the calories.
Well, on somewhat of a lighter note, I'm going to share my screen here. On obviously, I'm excited. Kevin Perrano's a Catholic guy, and I'm excited to understand what a new pope in Italy is going to have to do on rates, which I'm assuming he's probably going to cover at some point in time, as he always sort of loops market events with rates into mortgage rates. But I find these memes absolutely hilarious because the obviously the Pope is from Chicago, and there's all these memes around all of these different, just funny memes. You got to love the internet. The internet just wins every stinking time. I saw one one moment about how the new bread and communion is going to be a hoagie roll, or it's going to be a Chicago dog. And then but the memes are just so classic. It's just a fascinating time in American history, but in Chicago history, to have such a remarkable thing. And he's a Catholic guy, so I'm curious to see. I had heard he's been joking around with people saying, that in essence, that this is going to have a positive impact on rates. So we'll see.
Sounds good. My favorite one I saw was that this Pope has probably eaten more hot dogs than all 296 or whatever the number is popes that came before him.
Yeah, exactly. Exactly.
Yeah.
I think they need to have what's that hot dog eating contest?
Yeah.
Have that right in Vatican Square. But no, this is good. You guys are you guys going home for Mother's Day? Are you gonna do anything for your mother? Or I guess you're gonna do something for your spouse, Jeremy, or something. But you guys do anything for moms?
I will not be making it home, but calls, gifts, etc.
Yeah, I'll be getting home. We're leaving early on Sunday to get back to spend time with Meredith, and I'll remember my mom for sure. She was a great lady.
Yeah, no, likewise. I know my mom passed away back in April, or back in November. When did your mom pass away, Jeremy?
2018.
That's right.
September 2018. Yeah.
Yeah, that's right. Yeah. Well,
So.
cheers to all the moms out there, to our mothers and maternal figures in our lives, and to everyone watching here. So, looking forward to another Friday and Real Fridays, and of course, are you going to Housing Wire too, Jeremy, in Colorado Springs?
Yes.
Okay.
I won't make it. I'm not, as you guys both already know, I won't make it to New York next week or the following week or whatever it is. Likely that could change, but I don't expect to be there. And then I will be.
I used to fly from Detroit. I used to fly from Detroit to New York multiple times a week. You can do it.
Maybe I'll do the old same day trick, Brock.
Yeah.
Maybe I'll do that one.
Those are a classic. Yeah.
Yeah.
Hey, just crash with Brock or myself, one of the two.
Yeah.
All right.
Rick, but yeah.
All right. I'll talk to you guys soon. Take care.
All right. Take care, man.